Because you're smart. So, so trying to figure out which trivia question I wanted to go with. But since you're a mortgage guy, when was the first mortgage recorded in the United States?
If I have to guess, I would say 1918.
1766.
Wow.
Goes way back. Yeah, hey, how's that, huh?
That was amazing.
It goes way back. There weren't very many of them then. But yeah, that was in writing.
Wow.
They had been verbal prior to that.
Do you know where it was recorded?
I think it was Boston.
Boston, okay.
Yeah.
I would love to find out what that mortgage lien was like.
Hey, this is Gary Hughes, Nova Agent, your agent for life, here with Yogi. He's the hardest working dog in real estate. I think you all know him. And we are here talking to Amit. We're going to be talking about loans today. So Amit, would you introduce yourself just so that I don't make any mistakes with your title or anything like that?
Yeah, Gary, thank you so much, first of all, for having me here. My name is Amit Kaim with CMG Home Loans. My title is a Regional Sales Manager. I'm looking forward to assisting you today.
Fantastic. I've known Amit for some time. We've done a number of deals together, so I trust him completely, and that's why I asked you here to share some of your knowledge, education, and experience about loans. So one of the biggest questions I get is, do you really need 20% down in order to buy a house? Because I can't afford to buy a house if that's the case. My answer is no. There are lots of ways around that, but would you start by explaining that 20% conventional loan that everybody thinks about as the standard home loan?
Yeah, absolutely. It's a question that always comes up in my conversation with first-time home buyers. Hey, do I have to have 20% to put down? And there are a lot of programs out there in a conventional realm that actually don't need 20%. You can put down 3%. You can put down 5% minimum down payment for conventional loans. Now, there are certain thresholds that we have to keep in mind for different counties. They have a certain loan limits where if you go below a certain loan limit, 3%, 5% is perfectly fine. A lot of first-time home buyer utilizes that. But if you go above a certain threshold that we have for certain counties, then the minimum down payment would be about 5%. So conventional, I would say 3 to 5% is the minimum you need.
Fantastic. So on a $500,000 house, if you had $15,000 in back of you,
absolutely,
we can start talking.
Absolutely.
So another program, this one is sponsored by the government. FHA came into being after the big crash, and we wanted to increase home ownership. Still around today. Can you talk about the FHA loan?
Yeah, it's a great program to help somebody who has minimum down payment, are working on getting their credit scores up, are limited with income and such, right? So the Federal Housing Administration offered the guarantees to the banks that, hey, if you help promote the home ownership, we're going to subsidize certain loan programs, right? So because you have a backing of a federal government, banks are able to underwrite loans for clients that have 3.5% to put down, may not have stellar credit that sometimes is needed for conventional loan. But it's a great program for somebody to actually utilize to get into their first home with limited down payment and just working on getting their credit and stuff fixed.
So in that compare-contrast category, a conventional loan, while you still could do it at 5%, you generally need a higher credit score for the conventional loan. If you don't have that higher credit score, then FHA might be a good option.
Correct. So when you have certain credit score criterias and you have limited down payment, because you have that assurance and the guarantee by the FHA, the banks are able to offer just as a normal rate on those particular transactions sponsored by FHA loans.
Okay, so those loans then the banks make because the federal government then guarantees the loan.
That is correct.
Does that mean if I'm a listing agent and I get a contract for 5% conventional or 3.5% FHA, should I consider one a better offer than another?
I think you should consider both.
Okay.
Because I've had clients that have done actually FHA loans, but they don't want to put down more than 3.5% down payment, right? They may have stellar credit, but they don't want to put down more than 3.5% down payment. So, I would say the listing agent should consider both offers and call the loan officers who have drafted those pre-approval letters and ask them, hey, why are they doing FHA loan? Why are they doing a conventional loan? And find out the details.
So just because it's FHA, it should not have a stigma.
No.
That's a
should not.
choice that a person can make.
Correct.
To engage in that based on their own financial planning.
Correct. I'll give you an example, right? So a client of mine was buying a home in Washington, D.C., and they wanted to buy a 2-unit property. And a 2-unit property in Washington, D.C. for an FHA loan has a higher loan threshold than a conventional loan, right? So they elected to go with an FHA loan because they wanted to finance more and put less money down. But they had stellar credit, income was great, but their down payment just wasn't there where it needed to be for a conventional loan. So FHA loan assisted them buying the house.
Now, when someone comes in and talks to you about that sort of thing, do you as a loan officer help them make those kinds of choices? You look at their financial situation and make suggestions?
Absolutely. I deal with a lot of first-time home buyers, so I want to understand their needs first. I want to understand what's triggering them to buy a house. I want to understand, is it a short-term goal? Is it a long-term goal for owning a house? Then I want to understand, okay, what's causing them to buy a house in regards to down payment, monthly payments. Have they done any kind of monthly budget? So I assist a lot of first-time home buyers with their planning, and I assist them with creating a monthly budget for them. So this way, once we identify what is their down payment requirement, what is their monthly payment requirement, then I can package different loan programs for them and showcase them the monthly payments, the closing costs, the down payment, and go over everything in detail with them.
So this is real, what you're talking about really is more than just give me your income. This is the maximum that you can afford. Go shop.
Absolutely, yeah. I mean, it's much more than that because it's the biggest investment they're making in their lifetime, right? This is the biggest debt they're ever going to have. So I want to give them as many options because I've had people walk in and applying for a loan and not even knowing that, hey, they had served in the armed forces and they would qualify for a VA loan. So it's always important for me to get to know as much information so I can give them the best scenarios.
I'm glad you just mentioned that, the VA loan, because I do have a couple of questions about that. And I'll start from one that I get from a lot of agents is that, oh, this person's not putting any money down. That makes them a bigger risk in this transaction. However, the VA loan is not something that you can apply for. It is something that you earn.
Correct.
And the VA loan is a privilege that's only given to certain people. But now that I'm off of my high horse about that, let's talk about the VA loan. It is zero down, or can be zero down. If a person has a lot of money, could they put money down and still use a VA loan?
Yeah, I mean, look, VA loans are amazing for our veterans who have, spent their life fighting for freedom and such. So there is that assurance, and again, you get it from the VA. VA will actually insure the loan. So when the loan is insured, the bank practically has very little risk, right? So this way, they can then offer up to 100% financing. So a veteran who has earned the certificate of eligibility from the VA, and it states that they can finance a home up to 100%, there's really no cap to the loan amount when you're buying your first VA home loan, right? Now, the only time it comes into play, Gary, is when people have existing VA loans, that they may have it on another home they used to live in, and now they moved out of the area, gone into a different area, now they're buying a home. So we have to do eligibility check to make sure how much eligibility is tied up to a previous VA loan and how much is left over that we can use for the new loan. And that sometimes determines now the minimum down payment that they would have to put down on a VA loan. But most VA loans, 100% for a lot of our veterans.
And it's not a thing just for low credit people who are trying to get something for nothing.
No, absolutely not. No, a lot of veterans that I work with have excellent credit score, has great income, but the fact that you can borrow up to 100% on a VA loan with a substantially lower rate than we usually see on a conventional or on FHA loans. It's a great tool that we use to educate our veterans, to show them if they want to put more money down, absolutely they can. There's no restrictions, but you can do 100% financing.
There is one interesting thing that I try to educate other realtors about with VA loans, is that if the appraisal comes in just slightly low, you can appeal it. There is a process for appealing a low appraisal where that really doesn't exist so very well for other kinds of loans.
Yeah, no, we can actually rebuttal the appraisal report if we have enough factual data that the appraiser didn't use, that you as a listing agent or the buyer's agent can share with us. Then it goes to our underwriter that is underwriting the VA loan. If they see, okay, something was left out, was not addressed, then we typically would go to an appraiser, the underwriter would, right? And then the underwriter would go to the appraiser first. If the appraiser sees, oh yeah, it was a mistake, great. But if there is no budging on the appraiser and then we have factual data, then we would escalate it to the VA by calling their hotline and talking to somebody who can actually assist our veteran with the right value.
Thank you for that. I just want everybody to know that. And in the interest of full disclosure, I am a veteran, Navy veteran. I made 9 patrols on a submarine, in both Pacific and the Atlantic Fleet. So I'm a little bit partial to retirees, to active duty, and people wanting to use their veteran benefits.
Absolutely.
I'm a big advocate of that, and I will fight diligently for them. So I appreciate, that's one reason I wanted to bring some of those smaller things out about the VA loan. So we've covered conventional, we've covered FHA, we've covered VA, at least in the basics. We haven't gotten too deep in the weeds so that someone would really get lost. How about for someone who really is that first-time buyer? They're living here in Virginia, and I know these programs exist in Maryland as well. You talk about what do you do if you're really a first-time buyer in Virginia? Are there special things that would apply to you that maybe are not going to apply to someone who's buying their second, third, or fourth home in a row, or maybe their second home?
You know, a lot of first-time home buyers, for example, let's say a recent college grad, right? They have a strong employment through their job offer letter that they're going to work at, good credit, but they just don't quite have the down payment saved up, right? So to promote the housing, the Virginia Housing Development Authority program, the VHDA, has come up with programs that actually helps first-time home buyers not only with a down payment that they may need 3% for a conventional, 3.5% for an FHA. They even have programs where they can subsidize some of their closing costs. So these are great programs that we do offer CMG Home Loans for a lot of our first-time home buyers in Virginia. But then on the other hand, Maryland also has a down payment assistance program called Maryland MMP program.
Yes, the Maryland Mortgage Program.
Yep. So those programs are great for people that are looking to buy homes in a different state. Those programs helps the same way the VHDA does, the down payment with the closing cost subsidy. And you know, home ownership is everyone's dream, right?
Yes.
They shouldn't be restricted just because they don't have the down payment. As long as the monthly payment works for them, as long as underwriting criteria checks off fine, as long as the credit is great, income is great, there's always possibilities.
And the MMP, Maryland Mortgage Program, if you're not the first-time home buyer, but you are disabled, I had a client who was paraplegic.
Yep.
And would have qualified for the down payment assistance and the lower interest rate through MMP.
Absolutely.
So whatever your situation is, what I really want as a takeaway from this is ask.
Ask.
So tell me, I come to you, okay, I'm Joe Blow the rag man, I'm Johnny Do Good here, and I come to you, what questions should I ask about something that maybe we haven't discussed here, conventional FHA or VA? Do institutions or companies offer their own programs that are not necessarily government programs?
Yeah, no, absolutely. At CMG Home Loans, we created this program called Home Funded, right? So Home Funded, what is that? Well, you've heard this terminology out there called Go Funded, when people are trying to raise money for any kind of nonprofit organization or any other cause they're raising funds. So we came across a huge number of requests from people that wanted to help the down payment assistance come to them. So we created Home Funded, and it's a great program where we basically have an applicant go online, create a user ID and password, and get a link that they can share with their friends and family members. Hey, guess what? I'm buying a house. I would love to get some assistance. So people can then give you money, $200, $500, whatever it is that they can give, and they can utilize that money for their down payment or closing costs, and they have up to a year to utilize that funds. And
Wow.
if they don't buy a house, those funds are returned back to those donors. So it's a great opportunity for sometimes when people are walking in just asking the right question. I don't have any down payment, right? What are my means? Do I go with the state-specific program? Is there something that your company has created? But our Home Funded program is amazing. A lot of first-time home buyers that have not purchased home because they didn't have the down payment saved up have utilized this to actually make their home ownership a possibility.
So on that example I gave earlier, $500,000 home, which is pretty expensive. I mean, you know, it's $500,000,
Sure.
right? You need $15,000 for a down payment. I've got that, it's in the bank, I've locked it down, but I don't have my closing costs. And I come to you and I say, here's my situation, what are my alternatives? You might say, let's set you up on
Yeah.
a Home Funded, is that
Home
what it's
Funded,
called? And then get your email out to your friends, family, get it going, and they can.
No, absolutely. It's a digital website, right? So you send the link to everybody saying, hey, here's my link, please.
This is awesome.
Yeah, please go help support my home ownership dream, and people contribute money all the time. And with the down payment assistance they're getting, we as CMG Home Loan, we also actually help subsidize part of that. So we actually try to match up to $2,000 or 1% of the loan amount towards our own assistant to give home buyers money that they need for down payment or closing costs.
So you're crowdsourcing your closing costs.
Absolutely.
Awesome.
Absolutely. And one more program that I have to
Okay, tell
talk
me.
about. You
know, I
mentioned-
always want to hear these things.
Correct. So what sets us apart at CMG Home Loans, right? We are looking at the needs that people have, and then because we're directly underwriting, we're not a broker, we're doing everything ourselves, we can create a certain loan programs that fits the need for the marketplace. There's a great program we have that is amazing. It's called All-in-One. And I may have to come in and actually talk to you about this more in detail, but I just want to give you a brief overview. This program is great for somebody who wants to pay off and accelerate their mortgage. So
Okay.
it's the only program in the marketplace where any money that goes into this account is first applied towards the principal and then interest. Because on a traditional mortgage, interest is pre-calculated.
Right.
Right? So through an amortization schedule, when you make your payment, it first goes towards the interest and then towards the principal.
Yes.
This program, it first goes towards your principal,
Ooh.
and then the principal goes down, therefore your interest goes down. So it's a great program where people can actually pay off homes 1 or 2 or a third of the time than they would on a
Wow.
traditional mortgage. And it's something that we have created, and it's a perfect loan program for a lot of folks.
That is very, very interesting. We're going to have some coffee. Of course, you know, I drink tea, but maybe we'll have water and go over the details on
Yep.
that, because that sounds very, very interesting.
You're welcome. Yeah, I'll come
Wow.
back anytime you guys need me to come back.
Awesome. Hey, I always like to end with a little trivia question. And I've been trying to figure out which, because you're smart. So, so trying to figure out which trivia question I wanted to go with. But since you're a mortgage guy, when was the first mortgage recorded in the United States?
If I have to guess, I would say 1918.
1766.
Wow.
Goes way back. Yeah, hey, how's that, huh?
That was amazing.
It goes way back. There weren't very many of them then. But yeah, that was in writing.
Wow.
They had been verbal prior to that.
Do you know where it was recorded?
I think it was Boston.
Boston, okay.
Yeah.
I would love to find out what that mortgage lien was like.
Amit, thank you very much
You're
for
welcome,
coming
Gary.
in. I really appreciate your time, your knowledge, and helping me to inform people.
No, anytime you need me to come back and talk to you, and love to see Yogi all the time, so
Okay.
it's always fun.
All right, so this is Gary, Nova agent, and my loyal companion, the hardest working dog in real estate, saying goodbye and thanks for watching.